What's up, everybody? Welcome to the channel where dreams come true. My name is Cory, and in tonight's episode we're going to be doing a stock market technical analysis update, and we're going to start out by looking at the ticker symbol SPY, the SP 500 ETF. But before we get into it, you know what you gotta do. Go ahead and smash that like button to help me out, and subscribe to the channel to follow along on all of my updates. Now let's go ahead and crack into these charts and see what's going on in the stock market today. Alright, so if we zoom in on the price action today, we see we had another bullish close well above the 5 EMA still, which brings us to a long run of closing above the 5 EMA, and we see this still very bullish trend getting up here ready to blow right through this previous all-time high and form new all-time highs. Now if you've been following along on this channel, you should know that that is no surprise for us, as we've been predicting a price level of about 341 and possibly even a squeeze up to about 350s before we finally see this market start to make a correction. Now we still have these gaps below us, which are going to act as support and give us areas to look for buying opportunities in any event that we get a pullback into the $330 and $327 range. So when we have price action this bullish, we see that we are going to break through this previous resistance, and if we go to a 1-hour chart, we can see that the bulls are really just building energy right underneath this all-time high, and they're just taking time off the clock, letting everything cool down and letting that energy build up for the explosive move breaking above into these new all-time highs. Now this is a very bullish price action as we see developing on the 1-hour chart. We see the price trading within this very tight range. If we draw another horizontal line in here, we've really just been trading between this $338 and $336 range. Only about a $200 swing from day to day, hour to hour. Just really taking up time off the clock, getting ready for that explosive move and the next leg higher. Now if we go back to the daily chart, we still see we have this beautiful upward trend with the 5 EMA well above the 13 EMA, and we're trading well above the 20 simple moving average. So each and every day that goes by that we continue to close above the 5 EMA is only building a case to go to these new all-time high prices that we expect to see very soon. So let's go over and take a look at the Nasdaq 100, and we see today we did break and close above to new all-time highs. And if you watched this weekend's video, we said on the 1-hour chart that we could see this sort of cup and handle pattern forming. And remember, a cup and handle is a bullish price action formation, and we expect to see a cup and handle end with a break to the upside, and that's exactly what we're getting. So this cup and handle has now come to a close on the 1-hour chart. We've broken to a new all-time high, and we're still looking for the Nasdaq 100 to get up to our $280 price target. So we're now well within striking distance. We had our nice 3-day pullback, closed the gaps below us, and bounced off of support yet again, which is now giving us that support and that foundation to bounce higher and go to new all-time highs. Now once we get up into the 280s, we're going to seriously consider a correction in this market, and a correction really just means a sort of ABC pullback where you get a correction, a bounce, and then a further move to the downside before resuming the upward trend. So right now, that is what I'm calling for. I'm calling for a price of 280 on the Nasdaq 100, and then a high possible chance of a ABC correction before ultimately heading higher on the Nasdaq 100. Now remember, with the Nasdaq 100, we remain bullish as long as the 5 EMA is trading above the 13 EMA. If you go back and you look at this bull run, the bull run is intact as long as the 5 EMA is trading above the 13, and that is exactly what we have. So we're still very bullish on this market because the technicals are very bullish, and we're following the price action and we're following the technicals. Now look for support at the Nasdaq 100 in any event that there's a pullback right around this $265 level, which we've seen tested as the previous breakout and then act as support. So we do have support on the Nasdaq 100 in any event there's a pullback of about a 3.5% to 4% pullback. We're going to have a support level here where we could bounce. Now I'm not expecting a pullback of that magnitude until we reach these all-time highs and these price targets of $280. So overall, still very bullish on the Nasdaq 100, and look for tech to lead the way for the SP 500 to form new all-time highs. Going over to the Dow Jones Industrial, we're looking at the DIA ETF here. I'm still looking for a pullback into this breakout range and ultimately a test of bounce support to head higher. Now the reason I say that is because the Dow had an absolute monster rally, and we saw this explosive move to the upside, and we did see a break of the previous higher high here. So now that we have this higher high, we're looking for a test of old resistance to act as newfound support before heading higher and ultimately closing this gap from the March crash around the $289 level. So the Dow is still looking very bullish, but I think there's still more time on the clock for it to cool off before ultimately heading higher. Now keep in mind the Dow does have these gaps below as well, but I don't think these gaps are going to come into play until this bull rally is over, and it does not look like this bull rally is over just yet. So going over to the VIX, which as you know is our fear indicator, we still want to see the VIX go lower as we expect to see all-time highs, and we had another lower close on the VIX, closing down around 21.4. Now this is absolutely what we want to see, with the correlation of the VIX heading lower as the SP 500 heads higher, and we continue to see the trend aligning with what we expect. So we're still watching the trend to continue down to the 18 level on the VIX, and any sign of volatility will be a test and break above this $23.50 level to tell us that we've probably reached the top. But right now, we're not calling a top. We still have a lot of upside to this market, and the market could actually surprise us and go even higher than what we're predicting as long as we continue to see the VIX close lower. There's still a lot of bearish sentiment in this market and a lot of cash on the sidelines, and there's still a very real opportunity of a FOMO price action move on this stock market. So let's jump over and check out the financials, and we see that the financials had another cool off period, closing down over 1.5% today. And this is not surprising because we saw the financials break out of this consolidation wedge, and it had a very explosive move, leaving a couple of gaps below in the process. So now that all of the gaps are closed, I expect to see the price action cool off, possibly test the breakout here, and then head higher and ultimately come up here and test this 200 simple moving average. I think the financials will have no problem breaking that, closing above, and then ultimately testing up here, forming a higher high on this market, which will be another bullish sign that the SP 500 will continue to head higher. And look for the price action to ultimately get back online with its bullish rally. And you see this green line and this nice upward attacking trend is going to remain intact, and I think we're going to see higher highs on the financials very soon. So this pullback could be a great buying opportunity to jump in on financials, especially with a test and break above this support level. Going over the industrials, we had a very similar thing with the breakout of the previous high. So if we see here, we had this previous high down here and we had this other high back in March. So we could really have this line on either of these highs. I choose to have it on the March high because I see here that we broke to a higher high, which is ultimately bullish. And this high is higher than this high. So we have definitely formed a higher high on the industrials. And we see that the industrials are really just taking time to consolidate this monster move. And we do see a test of the support and a bounce. So look for the industrials to consolidate their gains, digest it for a little bit, eat some time off the clock, and then ultimately begin to bounce off the support and continue higher. So still very bullish, and the industrials and the financials will follow the tech and the healthcare sector to continue to lead the S&P 500 higher. And right on track, the healthcare broke to a higher high and had a higher all-time high close, and we did see a follow through of that close above to higher high to form an even higher high close today. So like I said before, healthcare just took some time to consolidate, went sideways, digested some of its recent gains here, and it's ready for its next leg higher. So look for healthcare to continue higher and follow tech and lead the way for the S&P 500 to continue to go higher as well. So jumping over to the US dollar, we see the dollar still showing signs of weakness, which is no surprise. The dollar has not been looking great over the last few days, and the dollar sort of formed this double bottom pattern, which we may see come down and test as support again. However, if the dollar is still in this downward trend, I would expect to see the dollar come down and actually not hold up support and break through and continue its downtrend. With any sign of strength in the dollar, we would expect to see a bounce and ultimately come up here and test this previous resistance. And remember, the dollar weakness is going to continue to lead to asset prices inflating. The weaker the dollar is, the more inflated assets are going to continue to become. So anytime we see strength in the dollar, that's going to tell us to get ready for a correction. But right now, the dollar still looks very weak, and there's no reason to believe that there's a correction coming in the stock market until we see something different. So going back to the S&P 500, keep in mind we're fully expecting to see a break of this $338 price range and a break to new all-time highs. We're definitely looking for a price target of 340, but I would not be surprised to see a squeeze into the 350s before this rally ultimately comes to an end and we see some type of correction. Now remember, there's no reason to be scared of this market. Any amount of pullback, we're only talking about a 3.5% pullback at the most before we find significant support. There's a lot of support in this market, just a few percent lower. So I know it seems scary that the price valuations and the price targets are so high, but there's really no reason to have fear in this market if you're following the price action. Remember, as long as the price action is bullish and we see these technicals telling us the price wants to go higher, and we know the risk and we know the downside, there's no reason to be scared of this market. Block out all the noise, block out all the bearish sentiment, follow the price action as a trader, and you will ultimately become way more successful. So please don't forget to smash that like button on this video. It really helps me out, and I hope these videos are helping you out. And remember to subscribe to the channel if you want to follow along on all of my technical analysis updates. So thanks for watching, everybody, and as always, I will see you in the next episode.